No one knows what the future holds, but if a new house is in your future, I can help from a safe distance. I'm Nick Acosta, your downtown expert, and I'm hosting safe and sanitary open houses. Nothing is different except for temperature checks at the door and masks are required. But it still smells like there are fresh baked cookies in the oven. So come on by one of my safe and sanitary open houses, and I'll say welcome home from 6 feet away.
This is Home to All, an all-inclusive real estate podcast with your host, Nicholas Acosta. Nick sits down with guests to talk about real estate and how it works. Reach him at downtown.expert on Facebook and Instagram, or his website, www.downtown.expert, or call or text him at 407-508-8809. Enjoy the episode.
Good afternoon, everybody. This is Nicholas Acosta, your host of the podcast Home to All, an all-inclusive real estate podcast. I've got two incredible guests. I got Mike Tinsetic and Frank. Let me go ahead and add you over here. How's it going, Mike and Frank? How are you?
Great. I'm doing great this Friday afternoon. How about you guys?
Doing great. Glad it's Friday.
Yeah, doing great here too, Mike and Frank. Yes, I agree. Well, and for my business, and I know with you guys too, we always work all the time, but it's all good. But it's still Friday, so that's awesome. So, Mike, just want to go ahead and get started here. So, introduce us to Frank, the audience of Frank, and what he does, and in regards to how it impacts insurance, home insurance, that is.
Yeah, absolutely. I'm going to let Frank introduce himself, but a little bit. I actually have met Frank through a mutual friend and colleague, and it's a very interesting story. He was actually comes from the attorney background, the personal injury attorney background, and has made the transition over into the insurance world. And I was like, why not a better person to talk to? Because he can see both sides of the fence. And that being said, I'm going to actually let Frank tell you a little bit more about himself, and instead of me.
Well, hi guys. Thanks again for having me. My name is Frank Villagrana. I'm a commercial risk advisor with AB Capital Group Insurance here in Tampa, Florida, and been in the business for almost 3 years now. And I started off. I graduated from law school in 2016. Sat for the bar a few more times than I would like to admit, and all through that, even all through law school, and even when I was in high school, I started off working in my father's law firm. He's a criminal defense attorney over in Tampa, Florida, and from there, I kind of got pointed in the direction of pursuing a career in personal injury. I was told the insurance companies have all the money, so that's who you should go after. And I got working in a personal injury office, and I worked for, there's two types of personal injury attorneys in Tampa. There's some that focus on just kind of turning and burning cases, settling everything pre-suit, and focusing more on volume than quality of cases. And I work for them, and I've also worked for attorneys that primarily focus on litigation and pursuing cases that, again, quality over quantity. And so I've seen both sides of that, and now I've come full circle, and my attorney friends like to say I'm now working for the dark side. And I don't know if that's true or not, but I definitely see both sides of that argument, having been in the industry for a little while now. But it's been quite an adventure, especially last year. But I made it through, and things seem to be on the up and up. So I'm hoping it stays that way. But thanks again for having me, guys.
Yeah, absolutely. Thank you for being on. And me and Nick have actually compiled a lot of questions here that we sourced from people in the real estate industry, and people, friends as well, and people in the insurance industry as well. And we got a lot of good questions here, and probably enough, maybe even for 2 episodes here. So I'm going to jump right in, because this is one of the most popular questions that is asked to us on the insurance side, and asked to Nick as well on the real estate side. And I know inquiring minds want to know this. So this is our number one most requested question: is when a residential property investor titles the property in an LLC, is that the be-all, end-all of protection, or can an attorney still pierce that corporate veil?
That's a tough one. It's a little out of my wheelhouse, but as far as piercing the corporate veil, the the LLC, they can still go after the. That's a hard one. They can still go after the assets that are available under the LLC, but as far as piercing that corporate veil, I mean that's what the LLC is for to offer that protection. So if there is a insurance policy under that LLC, well, that's the money that's going to be available for them. But as far as going in, and it depends how that company is structured as well. If there's multiple LLCs, well then through agency or common ownership, an attorney could also find another pocket of insurance money to go after depending on the claim. So there's always a way, and the attorneys now are craftier than ever. And if there's money available, they will find it. But LLC protections, again, it's going to depend what kind of policy is in place for that LLC. That's going to depend. That's also going to be what they're going to be able to go after.
So you're still recommending because we see a lot of this, especially with foreign investors, and they're given bad advice or good advice. When they come and they're buying up all these properties in Florida. We run into it a lot of the time, even on the insurance side, and I'm sure Nick runs into this as well. But they think that just because they have that LLC, that it means we don't have to carry insurance on any of these. Is that furthest from the truth?
Yeah, that couldn't be further from the truth. If you own a property or a business in the state of Florida and you don't have at least $1 million in liability coverage, you're really rolling the dice. I mean, you're really playing Russian roulette with your business, because it doesn't take much to get there. One injury, one liability claim, and you're at $1 million real quick. And just because something's registered as an LLC doesn't mean that you're getting away scot-free. I think that term, limited liability corporation is it's almost like a misnomer, because you still have somebody's going to be liable. You're still liable. If you injure somebody, if you commit a wrongdoing, you still need to have an insurance policy in place. So that, by all means, that does not mean that you're not liable, or you need to not carry any insurance. No matter what you do in the state of Florida, you need to carry insurance, because, we have, I almost like to say it's a litigation culture, especially here in Tampa. You can't go anywhere or watch TV without seeing an advertisement for personal injury attorney or some sort of legal service. And people in Tampa and St. Petersburg and all over Florida are conditioned to, something happens, let me immediately call my attorney and get a claim going. And what I tell my clients all the time is, even a frivolous claim is going to cost you money. So it's imperative to, whether you have a small business or large business, make sure you have the proper insurance in place, because just because you have an LLC after your company name does not mean you're protected and you're free and clear from any liability.
What's some of the types of claims that you've seen on some of these investment properties? I mean, speaking on my behalf, and I know Nick is probably the same here. We've seen everything from dog bites to slip and fall, and then you wind up can't evict the tenant because they haven't paid the rent in 10 months. What's some of the ones and I know Miami is a whole different territory down there, where like 45% of all claims go to litigation down there. And I mean, I've heard Miami's just got its own stories, but around like Central Florida and Tampa, what are some of the ones that or some of the risks that some of these investors should be watching out for, or claims that could come to rise?
Well, with investment properties, obviously the first one coming to mind is the slip and fall. If someone has an investment property and they have a management company overseeing that, making sure everything from the stairwells, the elevators, the parking lot, all those things come into play. Everything needs to be updated and kept, because those are what we see all the time. We had in my office, we had a recent claim in an old investment property over in Jacksonville where somebody stepped into a pothole in a parking lot that had been that the insurer had requested to have them fixed, and they didn't do it, and sure enough, that led to a claim. And another one, dog bites. Dog bites in the state of Florida, that's a strict liability offense. So no matter what, even if the owner of the dog wasn't aware that it even happened, or he wasn't even in control of the situation, that owner is going to be strictly liable. So all these things come into play, and also with with these investment properties, that's why it's so important if it's a property that has an association overseeing it. There we have claims that arise from the directors and officers of that association that can affect those people. You have to have a directors and officers policy in place, a crime policy in place. If someone in the association were to misuse funds, or there's so many different claims, especially now that can arise out of something like that, or just a simple property investment. So that's why one of the podcasts, sorry to deviate a little bit, but one of the podcasts I heard you guys talk about was kind of integration of businesses, and that's I think you talked about having a place you work at where you can also work and have somebody go get your dry cleaning, kind of a combination of services. Well, in the insurance world, I think that's almost imperative. We have to kind of change the way we work, where we can't just sell an insurance policy. You also need to be somewhat of an advisor to your client. And if the client calls you and he's looking into an investment property, well, these are all things you need to shed light on for him, because they may just be thinking, I'm just worrying about some slip and fall, or some simple and common dilemmas we run into and claims we run into. But there's a lot of out of the box things that are a lot more frequent than the classic dog bite, slip and fall type of liability scenarios we're used to.
With that, Frank, I was going to ask you, when do attorneys say no to a case and pick another?
Limits, money. I have questions clients ask me questions all the time about, clients that are small businesses, a guy owning a tree trimming business or a lawn care service. And, maybe it's a very small business, but they're like, how much should I carry? What should I worry about? And if you don't have money and if you don't have assets, if there's not a lot of money involved in a case and it's a lot of work, then attorney's not going to go after that. He may just go for the money that's available, and that's that.
How do they, and here's a question that's kind of in tandem to that, and it's another popular question that was asked, is how do a lot of the PI attorneys in, like, let's say a case of a dog bite or a slip and fall at an investment property, how do they calculate that? Is there a calculation for the pain and suffering, or how do they work that?
No, they're going to look at your damages on a case like that are going to come from your medical bills. What kind of damage was inflicted? Is it a permanent injury? Is it something that's going to give rise to more treatment and pain and suffering in the future? So these are all things that come into play. But for the most part, when something like that does happen, the first thing they're going to look at are the damages that they went through, what they paid out of pocket, and that's how they come up with a number for their demand for settlement based off of that. Pain and suffering, you see that a lot more when there's a fatality, or if it's a very severe injury. But in the long run, the main thing that matters is is there a pocket of money available, and what are we going to have to do to get it? Is this something that can be settled pre-suit? Is this something that we're going to have to litigate and fight tooth and nail over? And it's not so much, once an attorney takes a case, and I know I mentioned before, there's different types of attorneys, especially in the St. Pete, Tampa area. There's litigators, those junkyard dog attorneys that aren't afraid to go fight for their client, and they kind of take every case personally. And I know a lot of guys like that. And there's also attorneys that are after the quick buck that kind of want to turn and burn cases. And, they send the client to go, has not such a serious injury, but they send them to treat a few times, run up some medical bills, and then write a demand for settlement and collect their easy money. So it's all to depend on who you get and how hard they're willing to fight for that. But at the end of the day, if there's no insurance money available, attorney's not going to take the case, bottom line.
Sure. No, some great feedback there. We've covered this in a lot of our recent podcasts, and I know that, and I'd like to spend the rest of our time, if we could, talking about and I know you got a lot of notes on this and a lot of opinions and feedback, but from your perspective, coming from the attorney side, where do you see this epidemic we are having with the hail fraud and the AOB going? Because that's on everybody's mind right now, which I've read the reform that's been proposed and passed and whatnot. And my personal opinion, I looked back at the AOB and I was kind of like, it's kind of like PIP. I looked at it going, it's a necessary evil that we have to deal with. But as soon as we get rid of it, what's going to happen is more and more attorneys are going to get into the game. And I think that's what we're seeing now, with that $1.5 billion loss, in Florida alone. And then, we're on track for 100,000 lawsuits this year. So what's your opinion on the reform and where you think it's going to go? Question, sorry.
That's a good one. It's hard to say looking ahead where it's going to go. What I think about it is obviously it's a problem. I don't do any personal lines at our office. I primarily focus on commercial lines, but I share office space with a gentleman in my office who does personal lines. And I can tell you that the rate increases we're seeing and some of the reactions that the insurance companies are having because of the years of this constant litigation and the AOB, what it's done to the insurance market here in the state of Florida is unbelievable. And we all, everybody who's who buys insurance, we're all suffering the consequences of it. So this sort of, and it's almost, I think you put it, I hate to say the word pandemic, but it does seem that way with this litigation. And, for 76 or 70, I think it was 76% of all housing insurance litigation in the state of Florida, that says something. That's mind blowing. And something has to be done because these policy premiums, the insurance companies are going to make their money back one way or another. And if we don't address the situation now, then it's only going to get worse in the future. So I think something's going to be done. I foresee that in the next year or two that we're going to see some major changes happening as far as the assignment of benefits and the claims that have been allowed to happen with these roof repairs being done. And it's what it's done to the market is just unbelievable. And now, we in the personal lines insurance, we're the bad guys now, even though we're just messengers, there's a lot of people that don't like us right now. And it's really not our fault. That's the problem.
Yeah. I made that comment the other day and talking about it. And I was like, well, really, still the beneficiary has been the homeowner, in most cases, because they've gotten a free roof, but they didn't know what the bill that was going to come down, whether it's, premium increases or increased taxes. And I keep saying, it's going to come due it one day. And just one real quick, I just want to get your feedback on that because somebody posed this question to me earlier. And they were just saying, well, it's absolutely ridiculous for, if it did go to trial and it did, mediation and whatnot, that where you could have a roof that literally had a hole in it. And, is it coming down to that the insurance companies are just going to say, okay, we're going to settle because we don't want to go to trial. We don't want to risk losing this and having to pay out hundreds of thousands of dollars in court fees or attorney's fees. Is that kind of why they are settling in most cases?
It's funny you bring that up because that's one thing I wanted to touch on. Every insurance company is different. There's some insurance companies that they do pay out. They avoid the confrontation and where liability's clear, where there is no reason to fight it, they pay. And then there's companies that fight tooth and nail when it comes to a claim. If there's any doubt on whether they are liable, they will fight tooth and nail. So it kind of depends on the insurance carrier. But yeah, I mean that's really the answer to that one. It just depends on the carrier.
And I see this in Florida, because I think, ironically, Florida is and I'll let Nick get to that question here in just a second, but do you think it's lopsided to, like, in most cases, to the homeowner, to the consumer?
That's a tough one. These aren't, that goes both ways, because I've seen it both ways. Sometimes, it depends really when, we have people, this past few weeks, we've had people call our office wanting to make claims on a home for a home they just bought with a 15-year-old roof. And now they're saying, well, I think I need to get my roof replaced. There's some wear and tear. Well, one, you've never made updates to the roof. It's really going to depend on the case. In that instance, I would say I don't think it does lean towards the consumer at all. And especially now, I think the insurance companies are tightening up a little bit, because, again, the payouts have been, over the past few years, have just been ridiculous. I mean, just look what's happening with policy premiums. Again, to touch back on that, that's all due to these payouts. And I think maybe having sided with the consumer for a little too much over the years, I think most of these companies are starting to get a little more defensive.
Hey, Nick, do you want to that
Sure.
question that came in, toss that one out?
Yeah, so we have David Wagner asked a question. Can someone get an umbrella liability policy written in their personal name, and it protects all of their LLCs in which they own properties or rentals?
I personally have not written LLC or a umbrella policy that does that. From what I've seen, usually, there's a personal umbrella that, somebody would carry. But that, again, I don't know, that's not going to apply to their LLCs. If usually, depending on, if he has an LLC for a certain business, or has a certain business, he would have an umbrella for that business under that, whether it's an LLC or not. So usually you see that individually, or if he has, one company, and he has an umbrella for that company, and he has other other entities under that company, then that would apply. But as far as writing an umbrella in your own name and having it apply to all your businesses and your rental properties, I have not personally done that. No.
I've seen it, and I'll chime in on that. It's done more because and I'm going back to pre-2008, where people were 30, 40 properties at a time and had them all listed under different LLCs. I believe it's not really written on a personal umbrella, because a personal umbrella is really not designed to do that. So usually in a lot of those cases, what the agent will advise the insured to do is go out and probably buy some type of commercial paper that has excess liability instead of a personal umbrella. So the only thing it's going to cover is those properties in the different LLCs. Now, the one thing you do for insurance underwriting, they have to have some type of common ownership. So the managers have to be the same. So, for example, like if we're a group of 3 guys and we invest in all these properties and we're listed as managing members on the LLC, that's okay. But if Nick's got his own LLC over here, I have nothing to do with that, and I'm Mike over here and Frank's down here, we can't wrap up just because we like each other and we're friends under the same excess liability policy. But yeah, generally when I've seen that done, it's not covering the primary residence. It's not covering, Bobby and Sue on the auto insurance policy. It's just specifically designed for those, investment properties. But that's a great question that came in. So yes, it can be done, but it just needs to be structured right. So Frank, let's get on the subject of real estate agents. What do you think are some of the emerging risks out there that, someone like Nick, being a brokerage owner right now, what do you think are some of the risks that are coming down the pipe that he needs to insure against? Or do you see anything in real estate?
That it's funny you asked that. So my office, we're members of CCIM, the Certified Commercial Investment Membership, and we offer real estate errors and omissions, package type policy for people just like Nick. Some of the things, right now, with a lot of over in Seminole Heights right now in Tampa is a hot area. A lot of older homes are being bought and sold, and when people move in, they're making all these conditions. I'll move in, or I'll purchase this home, condition on that. I want this fixed. I want certain things done, and when they're not done, well, again, we live in a city that's very litigation happy. I mean, they're ready to sue on a moment's notice. So I think it would be imperative to carry an errors and omissions policy. And a lot of people think that, well, that's only a policy that applies if you don't do your job right. But for somebody in the real estate business, such as yourself, that can mean, you have a lot of people you depend on. You're people who do your inspections and a lot of stuff that's out of your control. And if somebody moves into a house and you're unaware and they find mold in a portion of the house, well, that's going to come back to you. That's going to be cause for a suit. If there's a construction defect that didn't come up in the inspections, that's going to come back on you.
Really?
So I would say, it's kind of important if you do own your own real estate company that you do keep these coverages in place. They're not very expensive, and in the end of the day, it can save your business because, I tell my clients all the time, even a frivolous lawsuit is going to cost you money. So it's almost, it's a no-brainer not to carry that insurance because your loss may not be something you did, but when you get that letter from the attorney and the legal action is initiated, you're going to wish you had coverage in place, and it can be life-saving for your company.
What about and I don't know how much Nick can probably tell me how much this goes on. Nick, do you see a lot of realtors like they were back in the day where I come meet you on a Saturday afternoon and me and my spouse jump in your car and you're driving around showing us houses? I mean, I know, during COVID that probably wasn't going on, but are realtors still out there doing a lot of that?
I would say for the most part, well, obviously COVID is one reason. But like my insurance company now, like the current, like the situation right now is that one, they say not to, they're telling us not to, and the general consensus from NAR, National Association of Realtors, are saying that you should have your buyers or sellers follow you in the car behind you, not ride in the car with you. And this was even before COVID pandemic. There are some times where I do see people out there in the field still. Like I talk to people when I get that they still do have their customer ride along inside their car with them. As far as an office policy for me as a broker with my brokerage, there is something in my office manual that strictly advises against it. I know they're independent contractors, and this is a good topic for us, Mike and Frank, for another episode. Because I wanted to talk about that too, was about that in regards to what I just mentioned. But the office policies and independent contractors and how they're covered, that's a good topic for another time. But yeah, for the most part, people are having their clients follow them. At least in my brokerage, I've had a couple of times where one of my associates have asked me. So for instance, there was a unique situation. I think the lady was unable to drive. And she wanted my associate to pick her up in her car. I bounced this off of my colleagues, and then we came down to it. The best recommendation that we were told to do was say that we would compensate at closing for that buyer for an Uber or Lyft ride because we did not feel comfortable. This was during the pandemic, obviously, but even if this was non-pandemic related and we weren't in this situation right now, I would still advise her to get an Uber or Lyft that could pick up this person. So the only issue that they had was they were not able to drive. They didn't have a license to drive. So even in that situation, because one is we're talking about liability, you don't know. One, obviously, if you get into an accident, that's a big one. And two, from my personal injury background in insurance, And two, if you something were to happen, because we hear stories all the time, Uber and Lyft, where somebody commits a crime against you if they were to attack you or to, potentially kill you, and you don't know who they are getting in your car. You just have to treat it like, with caution is what I should say, until you truly get to know who the person is. I highly recommend, like I said, for the majority, real estate brokerages are advising their associates to have the person follow them. But there is, every once in a while, I do see or hear about people bringing them in their car still. But as for me as a broker, in my brokerage, I highly advise against it for my associates, for their protection.
And I got a great question to end with here for Frank, which is something Nick brought up. If we do have employee handbooks, whether it's in real estate brokerage or whether I have one here, I mean, are we still liable, even like if our employees don't, like, let's say one of Nick's agents still doesn't abide by it and goes out and, has, a potential buyer in the car and they get in an accident? I mean, can he still be held liable even though they didn't follow the manuals? Or
That's a tough one. Usually, so I mentioned real estate errors and omissions earlier. Well, that's not going to do anything for you if you get into a bad car accident with a client in the car. Again, no coverage for that in that policy. So as far as you, the owner of the company, being liable if one of your agents does this, well, absolutely. That could come back on a number of ways. But if there's negligence as a part of that accident or that gives rise to that accident happening, it's going to come back on you for sure. That's why if your company is big enough and you have if you have a fleet of vehicles, like a larger real estate brokerage might have, then there should be a commercial auto in place. There should be coverages in place that prevent this from coming back to you, the owner of the company. But as far as package policies for real estate professionals and errors and omissions, or most of the policies aren't going to protect you against something like that. So I would make it commonplace to have your clients meet you there, not drive your clients around, show them. I know that was a thing of the past, but and also another thing would be to make sure that your real estate agents are carrying an adequate limit of insurance as well.
Right.
Because that's even a 1020 policy. I wouldn't have them riding around with clients in the car with a 1020 policy, even though that's fully covered in the state of Florida. I would make sure those numbers are bumped up if that's something that they're going to be doing.
Good point. Really good point.
Awesome. So Frank, what do we do on the show? So we're wrapping it. We're at the end right now, but we'd love to have you on again because there's so many topics, and this has been a really exciting episode, by the way, for both of you guys. It's very informative. There's a lot of stuff that opened up my eyes to things that I'm going to reach out to Mike for, or Jason Sandville or Blanchard Insurance to ask to get more policies in place. Even like the commercial thing, for example, even though we're not driving anybody, but I can just see maybe possibly even thinking about a commercial policy because, what if we're out and about? I don't know how this would work. Just real quick before we get into the last question of the episode, but the other thought that was on my mind, Frank, while I was listening to you and Mike, was what happens if you were, I don't know, let's just say you are driving your own car, you're separate, you're following each other, because this is not necessarily happened to me with a client. This happened to me in general when I was going to an open house myself, and a lady was in her car. She was her husband was in the hospital, unfortunately, for a medical procedure. She was leaving her house. She was flustered, obviously. We're human. That's what happens. We're emotional. We're sad when we have to take a loved one to the hospital. So it's understandable. But when I had stopped at the stop sign, and then after I stopped at the stop sign, she just literally, this was a while back, maybe a year, 2 years ago, 3 years ago, she had basically slammed into me, not seeing the stop sign because she was in a panic. But what if something like that were to happen? Not necessarily that a client's in the car, but if maybe the client's following you and you slam on the brakes because somebody in front of you slams on the brake, and then your buyer or your seller behind you slams into you, and then now they're going to the hospital to the trauma unit and having injuries, and who are they? Obviously, they're going to probably try to come after, or certain attorneys out there may try to come after me as a broker and say, well, he owns a brokerage, he's a business owner. Maybe he's got some big policy there that we can go after to pay this buyer or seller's medical bills.
That's a good question. So an event like that, let's say there's some fairly serious damages. Again, it's going to go, the first pocket that's going to apply is going to be your personal auto policy. What limits you have there. Do you have uninsured motorist coverage or underinsured motorist coverage? And then from there, what assets do you own? If you really, it all depends on the injury. It all depends on the damages. But if you have assets and you don't have a personal umbrella in place, and it doesn't matter that you were, if it's your company and you're the one that caused the accident, you had a buyer with you, and you slam into them or they slam into you, well, the person causing the accident, well, that's the first pocket of money available. Once that's exhausted, do you have an uninsured motorist coverage or policy in place? That's the next pocket of money. And then once that's exhausted, well, if you don't have, let's say you don't have a umbrella, personal umbrella in place, they're going to look at the assets you have. Well, you have a company. Okay, let's go after the company. It's all about, again, what you have, what assets are available. And depending on how bad the damages are, they're going to find it. They're going to find the money. The lawyers here are going to find the money, no matter where it is. My clients, I get asked this every week. Well, what if I separate my entities and kind of hide my assets from my company when that worst case scenario happens? It really doesn't matter. The only thing you can do is prepare yourself. Make sure you're sufficiently insured, because if you are somebody with multiple businesses and assets, and the unfortunate thing does happen that gives rise to a big claim, they're going to find the money one way or another, whether it's through your insurance policies, your companies, or your assets. So that's why one thing I always tell my clients is, as your business grows, your insurance program needs to grow as well. Your limits need to grow. People hate paying into insurance, especially when they never use it, but it only takes one time to realize that this can save your business in the long run. So I would keep that in mind. So if you, Nick, as your company continues to grow, just keep an eye on that. Keep that in mind, that your liability is going to grow as well. The deeper your pockets get, the more people are going to want to get in them. So make sure you're protected.
Awesome. So, Mike, before we do our final question, do you have any other questions for Frank? Or
yeah. Actually, one question did come up, and I was really interested that he pointed that out. Was can they go after company assets? And it's not really a question, but that was a good point where they can bridge from personal to those business assets. And just to add on to what he was saying is, I've always thought of the insurance as a get out of jail free card, because people don't realize, they're like, well, I'm going to get sued and whatnot, but going through that process, and we've had clients who have gone through litigation, mediation, gone to trial, and the emotional toll and the time and effort spent for them to go through it is crazy. I'm surprised most of them don't have PTSD. They probably do from it. And it's like, you want to go out and hire an attorney to protect you? Do you have to go through all that process? Or, because when you're buying insurance, it comes with attorney's fees built in. They are representing you. It's almost like prepaid legal, like legal. You could actually make a correlation between the two, but it's a headache, and all you're doing is taking that headache and purchasing an insurance policy so you do not have to deal with the brunt of it. Because the insurance company is going to go out and hire an attorney to defend you. They're going to be doing all the paperwork. And I've seen people try to do it on their own, and God bless them. I would never ever want to do that.
Doesn't end well.
And to a point Frank said is, I've heard this said by some of the most genius people in the insurance industry, is Insurance is designed that you don't want to use it. You don't want to go out and burn down your house just to, file an insurance claim. You don't want to go out and crash your car into a wall to use your insurance, albeit probably some people do. But that's the biggest misconception. It is more like a get out of jail free card because you want to have it there to use it, but you don't want to go out and proactively have to use it. And that's one thing in this society of instant gratification that people can't see. Because they buy something, they want some immediate satisfaction. I buy a hamburger through a drive-through. I get to eat it. Insurance does not work like that. And I think that's where the modern consumer has a hard time digesting it.
No, I completely agree. All right, so Frank, we're at the end of our episode, guys. So I want to go ahead and toss this question to you first, and then Mike after Frank. I always ask, what is one piece of advice, wisdom, or whatever you want to call it, that you have to give the audience for this episode?
Oh, that's a tough one. Again, I'm going to go back to something I said earlier. As you know, again, in the state of Florida, if you are a business owner, and again, I'm a commercial insurance agent, so this may not apply to your typical homeowner or somebody looking for real estate, but if you own a business, don't try to save money by going with lower limits on your insurance, whether it's your general liability insurance, property insurance, umbrella. Make sure you have at least $1 million in coverage. And again, it's not gonna break the bank. Depends on the line of business you're in, but that's pretty standard policy. And as your business grows, as you add more locations and you add more employees, increase those limits. Also, an excess policy. It may not be the right call for somebody that's fairly new starting a business, but as your business grows, that's something that's imperative. And one thing that I see a lot of when there is a big claim and your primary insurance may not want to pay out the full amount, and you have an excess policy in there, well, the excess provider is gonna lean on your primary carrier to pay that out. One, because they don't want to have to pay out, but having the sufficient coverage in place is going to save you in the long run. And as your business grows, it's going to prevent you from getting in a situation that can tarnish your reputation and end your business. So that's probably the wisdom and the last message going on, I would say, for people listening.
Awesome, Frank. How about you, Mike, for your wisdom for today?
My wisdom for the day is not all insurance companies are equal. And when I say that, and I know you see advertisements on TV for that and get them in the mail or wherever. And I know people think that's cliche, but it is actually very true. And I'll give you a prime example of a commercial condo association board I sit on. And I've sat on it for, probably going about 15 years now. And we've carried the same general liability insurance. And, it costs a little bit more money, but I can tell you it's gotten rid of a lot of frivolous lawsuits because they've gone to battle for us. And we've gotten rid of fraudulent slip and falls that we had thrown out of court. We've got even from a branch falling off a tree and falling into a person who was visiting the property's car and damaging the windshield. And that person just happened to be an attorney for a law firm. And we got out of it. And we were sitting here going like, oh my God, we're going to lose all of our assets and everything. It's just what Frank said. It's equally as important to not only get the right coverages and limits and get them in place and make sure everything's structured correctly, but to ask the insurance agents too, is like, what am I buying? What is the loss experience with this company? Because some of these companies, especially when you get into the excess and surplus lines market and when they're Lloyd's syndicate companies, and people got to remember, some of these companies are the largest insurance companies known to man, and they have armies and armies of attorneys who can figure out a way probably not to pay you. So it's always good to ask somebody like Frank and say, like, what is your experience with this company? Is this the best company that is going to pay a claim that's going to happen. Because the only value, and I'm sure Frank can agree to this, is the only value to is an insurance policy is actually its ability to pay a claim. And people don't think about that. I mean, you can have a stack of paper that does nothing if it can't pay out a claim.
Correct.
That's probably my best advice for the day.
It's good advice.
Oh, good advice for sure, Mike. And same with you, Frank. So just wanted to say, both of you, Mike, thank you again for being on, as well as Frank. Thank you for joining us out of your time. We will mention, no worries, we haven't heard any roosters over there in Ybor City yet. No, I'm kidding. If you didn't hear roosters, you might have heard the dogs of ours on the podcast, but it's all good. But just want to tell you both, thank you for joining. And Frank, you have an open invitation to join Mike and I whenever. I'm sure Mike will second that. Yeah. And we'd love to have a second and a third possible follow-up to this, because I kept thinking of more questions as we were talking. So, especially like when it comes to automobiles, since that's, we have that background. So, yeah. All right, guys. Well, thank you very much for joining me today on the Home to All podcast. You can subscribe to it on Google Podcasts, as well as Spotify and Apple Podcasts. This has been Nicholas Acosta, your host, Home to All, real estate broker with Downtown Expert Realty and Downtown Expert School of Real Estate. Again, Frank, thank you for joining us. Mike, I'll see you next week. And then hopefully, Frank, you can be on with us next week too, if you can.
Definitely. I see a part 2 and possibly a part 3 in our future here. So
most definitely. All right, guys. Well, you guys have a good day. And this is Nick Acosta coming from St. Pete. And then you got Frank in Tampa and Ybor, and then Mike over there in Altamont Springs. So you guys have a good day. Take care, guys. All right.
Thanks, everybody.
All right, guys. Have a good day.
This has been Home to All, an all-inclusive real estate podcast. Find Nick on Facebook and Instagram at downtown.expert, and also his website, www.downtown.expert, or call or text him at 407-508-8809. Thanks for listening.
Don't spend hours or days looking for your new home. Let a downtown Central Florida expert guide you. I'm Nicholas Acosta, and I'm here to welcome you home. Being a Florida native, I know how exciting, stylish, and convenient the downtown lifestyle can be. From the nightlife scene in the heart of downtown to the natural beauty of Florida. I'm Nicholas Acosta, and I'm here to welcome you home.